Good evening, everyone. My name is Jerry D'Ambrosio, and I want to welcome you all to this week's special presentation. Do you sometimes feel that you're late to the party and that you missed out on a tremendous buying opportunity? You look back weeks later after an explosive market rally only to kick yourself for not joining in on all the fun. Major market bottoms don't come around that often, and if you don't put yourself in position, you won't see those incredible returns in your portfolio that a lot of other investors are getting. VectorVest provides all the tools necessary to take advantage of buying opportunities of a lifetime. Effective bottom fishing requires the following: precision timing and stocks with explosive upside potential. Let's move into the software. So here we are looking at a market timing graph from September 1st of 2016 to October 28th of 2016. So latter part of last year. And there's really no denying that at this point on October 28th, the market's in a downtrend, right? The market had been hitting lower highs and on a current basis here on October 28th, hitting lower lows. If we look at the MTI and the buy to sell ratio, so this is all about studying a market timing graph, identifying what the market is doing, and really interpreting two of our key market timing indicators, the MTI and the buy to sell ratio. On October 28th, the market just hit a new low. The MTI hit a value of 0.76 and the buy to sell ratio hit a value of 0.35. Okay, they're not quite at those oversold, over extreme levels just yet. We look at the MTI in a range between 0.60 and 0.69 and the buy to sell ratio between 0.20 and 0.29. Anywhere in that range, we really feel that the market is extremely oversold and a rally is generally imminent. So what you want to do is you want to come into this market timing graph every night, study the graph, study price action, take a look at our market timing indicators and see where they are currently. After you do that, what you want to do is you want confirmation, okay? You want to read the VectorVest views to see and confirm if what you're looking at and how you're interpreting things is correct. So let me move into the VectorVest views on October 28th of 2016. All right, and I'm just going to read the strategy section. Now this was a Friday, so a little bit more comprehensive on Friday. It says the price of the VectorVest composite fell 52 cents per share over the last 5 trading days and closed below the technical support level of 37.60 per share. Nevertheless, the buy to sell ratio closed at 0.35, which is well above the oversold level of 0.20. So there's still a high likelihood that the price of the VVC will move lower. Although earnings season has been better than anticipated, some big names have taken a severe beating over minor issues. The heavy hitters are not in a good mood, so remain vigilant. So what we're saying here essentially is now's not the time to buy stocks. Okay, we're not quite there yet. It says prudent investors should not buy stocks at this time, and if you're aggressive, play the market to the downside. So we first talk about how the buy to sell ratio is low at 0.35, but it's just not quite at that 0.2 level that we feel the market is extremely oversold at that point. Let me move back into a market timing graph and fast forward a week. All right, fast forward a week and we're here now at November 4th, okay? And this was a big day in the market for a couple of reasons. Now, it wasn't a tremendous up day necessarily. We could see that the VVC price closed just barely above the close of the previous day. But on November 4th, the VectorVest composite formed what's called an inverted hammer. You can look at it as an inverted hammer or even a gravestone doji. The candlesticks are very similar. Let me talk about what an inverted hammer is and really the psychology behind the market on that day. First, the market is categorized by a downtrend, okay? So you need to be in a prevailing downtrend, and clearly we were at the beginning of November, right? The day the inverted hammer is seen, the market opens at or near the low of the day. Prices change direction, we start to see a rally. Okay, that's evident by the very long upper wick that we saw here on November 4th. However, the bulls aren't able to sustain that rally for the rest of the day, and the bears come in, they close the market at or near the low of the day. Okay, so they actually closed it relatively near the low, about 4 cents off of the low, and just about 3 cents higher than the open of the day. Now, the answer to the question of whether this pattern could potentially signal a reversal has to do with the next day. The answer is really the next day. That this pattern itself, this candle itself, doesn't necessarily signal a reversal just yet. It's a great sign to see that the bulls were able to come in, push the market all the way up to a high of 37.09, but again, they weren't able to sustain that rally. So this candle alone doesn't signal a reversal. Really, the next day is what's going to determine if we've seen the bottom. We're not there yet, right? We haven't seen what happened on November 7th. November 4th was a Friday. We don't know what happened on November 7th, but if you listen to the daily Color Guard report every night, if you listen to the timing videos on Friday, this was a Friday, you will hear us talk about this type of candlestick, okay? I'm going to create a date line, and I'm going to put it on November 4th. What's also happening now is both of our market timing indicators, the MTI and the buy to sell ratio, are now within those ranges, right? The 0.6 to 0.69 range and the 0.2 to the 0.29 range. So we have a lot going on here on November 4th, not only with a bullish candlestick formation, okay, inverted hammer, but also those two indicators are at extremely oversold situations. So what do we want to do next, right? We want to go into the VectorVest views. We want to confirm what we're seeing here on a market timing graph. So let me do that. I'm going to change the date up at the top. We're going to go forward one more week to November 4th. And that was a Friday as well. So let me read the strategy paragraph. It says the price of the VectorVest composite fell 65 cents per share over the last 5 trading days, and the buy to sell ratio closed at 0.21, indicating a very oversold market condition. It had closed at 0.20 on Thursday and climbed as high as 0.27 today as bargain hunters bought stocks. However, mid-afternoon profit taking took the buy to sell ratio back to 0.21. Anything can happen next week. The market could rally explosively, so stay alert for a chance to win big time if you get it right. With 3 yellow lights, a down-down situation, the color guard is still neutral. Notice our guidance necessarily isn't changing on this day. We're not saying, go out and buy stocks immediately on Monday. We're still saying if you're prudent, don't buy stocks at this time, and if you're aggressive, play the market up or down as it develops. But this guidance here is really getting you ready, right? It's preparing you for an explosive rally. Our market timing indicators are at those levels where we feel that your upside potential outweighs your downside risk. We want to get you guys ready for an explosive rally. Let's move back into a market timing graph. And I'm just going to forward one day, and boom, look what happened, right? The VectorVest composite rallied big time on November 7th. This candle, by the way, folks, is another Japanese candlestick formation. It's called a white marubozu. My Japanese is a little iffy, so I hope I didn't butcher that. But it's formed where the opening price is equal to the low of the day and the closing price is equal to the high of the day. We can see that the close was just about 0.5 cent off of the high. This shows that buyers were able to control the price action essentially from the first trade to the last trade. Its position within kind of the broader market is very important. It may show a potential turning point and suggest a reversal if, say, price reaches a support level after an extended decline. Okay, we can see that it has been an extended decline. We're looking at about a 5% correction here, folks, from the high of September 7th to the low of November 4th, about a 5.5% correction. Okay, so if it appears after an extended downtrend, especially after a bullish candlestick pattern like an inverted hammer, this is it. This is really the rally that we've been hoping for. Okay? Again, though, let's see what the VectorVest views said on that day, November 7th. Okay? It said Wall Street soared today as investors became confident ahead of the upcoming presidential election. However, with 3 yellow lights and a down-down situation, prudent investors should not buy stocks if the market is falling, and aggressive investment traders should play the market as it develops. Look at all the one-day winners, okay? All the one-day Derby winners here are all bullish. And you know what? I forgot to show you the one-day Derby winners from November 4th, right? Look at the one-day Derby winners from November 4th. 4 of the 5 top strategies on November 4th, that was the inverted hammer day, were bottom fishing searches. That right there also helps us get a sense of really the psychology of the market, the turning point potentially. Buyers are starting to come back in. They started coming back in on November 4th. They came in hot and heavy on November 7th. So we're kind of taking all these pieces, we're putting them together, and we're really seeing a nice buying opportunity. Now, on November 7th, again, that big up day, the primary wave was still down. We still said, don't buy stocks if the market is falling. Aggressive investors should play the market up or down as it develops. I'm going to go back to a market timing graph. So if you guys are good and you guys are really astute traders and you see a downturn like this and an inverted hammer on November 4th and our market timing indicators at those extremely low levels and the top 5 Derby searches are all bullish and 4 of the 5 on November 4th were bottom fishing searches. If you see a gap up the next day on November 7th and you really feel comfortable getting in, by all means, participate. Again, we really feel that your upside potential outweighs your downside risk. So theoretically, you could have participated and gotten back into the market at some point on November 7th. I'm going to stick to more of a systematic, mechanical approach, and I'm going to fast forward one more day, and I'm going to put the primary wave timing signal on because the primary wave didn't turn up until November 8th, just a day after. So we're a couple of days off of the bottom here, a couple of days off of the low. Okay, our market timing indicators are now turning the corner, right? The MTI is now at 0.77. The buy to sell ratio is now at 0.46. So on a more systematic approach, here's your signal. This is your signal to get back into the market. Again, theoretically, you could have gotten back in the day before if you felt comfortable enough. And your risk is relatively low either way. What I mean by that is, let's say you got back into the market on November 7th. Where are you setting your risk? Where is your, let's say, market risk? Okay, if you get back in, you start to buy a couple of stocks. Well, what happens if the market doesn't rally like it did and starts to turn over again? Well, you know, you're looking at the low of November 4th. If the market breaks down and establishes a new low, I would say that's where you'd put your risk. So you're not taking on too much risk there, as long as you're aware that if things start to break down, that's where you'll get out. Okay, so that's on the market level. Okay, we talked about on one of the first slides that it takes a few things. It takes precision timing, and we've gotten that. We've gotten precision timing. We're looking at candlestick formations. We're looking at the MTI, the buy to sell ratio, to help us identify these extremely oversold situations, and we're using the VectorVest views to confirm what we're seeing here on a market timing graph. Well, what's next, right? We have to look for stocks to buy. So I'm going to use the date conservatively on November 8th of 2016 as our trigger date, as the date where we got back into the market. Okay, I'm going to go into Unisearch. I'm going to take the date back to November 8th of 2016, and we make it pretty easy for you folks. You know, we have a folder, an entire folder in the Unisearch tool called Searches Bottom Fishing. The folder, or the group you can call it, contains different types of bottom fishing searches. You know, a lot of people say, I would never buy a $1 stock, or I'd never buy a $2 stock. That's understandable and that's fair. We have searches in here for you folks who are looking for the big boys. Remember, Dr. DeLito wrote in the views a few days prior that the heavy hitters were taking big hits for very little reason. Well, let's take a look at those blue chips, right? Those big boys. So we have a search in here called Blue Chip Bargains VST divided by RT. It simply looks at the Blue Chip Bargains watch lists and it sorts that watch list, bringing us the stocks with the best combination of value, safety, and timing, but the ones that have been beaten down in price the most. So if I run that search on that day, look at what we have at the top. CVS, Dollar Tree, Allergen, Amgen, Dollar General, Nike. So you have some big boys up at the top of the list. Okay, let me close this section down. Most of these stocks, if not all of them, are undervalued. Excellent to good RV ratings. Very good safety ratings. Okay, so they're fundamentally sound companies. We know that. We know these companies. But look at the RT rankings. Well below 1. Look at some of these stocks. They even have sell ratings as well. And this is the only time in this type of a market where we would suggest buying a sell-rated stock. Okay? These stocks have great upside potential, but they've been beaten down in price very badly with the overall market. That's kind of expected. So what I'm going to do is I'm going to quick test the top 10 stocks from November 8th, and I'm only going to go out about a week and a half. I'm going to click on quick test top 10. Now that brings it to current. It's up 9% current, but I'm going to go out only a week and a half to the end of the following week, November 18th, and I'm going to run that test. All right, not a bad return. Okay, roughly about 5% with 8 winners and 2 losers. Now we did outperform the market. The market went up 3.39%. You could see the VVC over that time period up right around a little less than 3.5%. So we outperformed the market. You might have to temper your expectations a little bit in terms of explosive returns with these higher dollar blue chip types of stocks. You're still going to make money. I'm not sure if you're going to get the returns that you're hoping for with this type of search, but that's up to you. You have to determine what types of stocks you're looking to buy off of these market bottoms. So that's blue chip bargains, VST divided by RT. It's a great bottom fishing search looking for blue chips that have been beaten down but have really tremendous upside potential as the market begins to rally. We have some other searches in this folder as well. Okay, a little bit more aggressive searches. They return relatively lower dollar stocks. And one of the better ones, honestly, in my opinion, folks, is a strategy called Jailbreak. Jailbreak actually has the same sort, VST divided by RT. If I go ahead and run that search on November 8th, most of these stocks here are undervalued. Okay, you have some overvalued stocks. And most of them, too, have good upside potential. Their RV ratings, for the most part, are favorable above 1. You have a couple that are below 1. Now, the RS scores aren't going to be very high. These are some lower dollar stocks, so you're not going to get a very high safety score. But look at the relative timing scores on these top stocks. They can't get much lower, right? 0.02, 0.03, and they all have sell ratings. So I'm going to go ahead and quick test the top 10 stocks here. From November 8th, about a week and a half later, 9 winners, 1 loser, 46.5% gain over that time period. It found dry ships, right, at $145. This thing went up 160% almost in just a week and a half. By the way, it actually went up more than that in just a week. It went up, I think, 1,000% or so. If I come back and just take the date back to the 15th, yeah, it went up 1,500% in just a week. Hopefully, some of you were able to profit and take advantage of that. But if you didn't, that's okay. There will be other opportunities. But let me go back to the 18th and run the test. So 9 winners, 1 loser, nice 46.5% gain. Look at the VVC again, only went up about a little over 3% over that time period. Okay, you got 1 stock in here, 1 loser. NVAX down 11%. Remember this number, 46%, 46.5% gain. Now what you may want to do is cherry pick. Now this was just taking the top 10 stocks, right? Let me minimize this and let me cherry pick a little bit. So what did we say earlier? We said that bottom fishing requires stocks with good upside potential. Well, relative value is that upside potential indicator. So let me just cherry pick the stocks from the top bunch here with a relative value above 1. Okay, I'm going to be a little bit more selective. That's 4, that's 5, that's 6, that's 7, that's 8, that's 9, that's 10. JNUG is an ETF. It's a gold ETF. So I'm going to skip over that one. So I took the top 10 stocks from the Jailbreak search with an RV score greater than 1. Again, just being a little bit more selective. And I'm going to quick test those. We did a little bit better, right? Now we don't have any losers. 10 winners, no losers, and we made a little bit more money. Now we're up to about 50.5%. Okay, so that's an option, guys. You can take the top 10 if you'd like. If you want to be a little bit more selective and just choose the ones with RVs greater than 1, you can do that. And you can see in this case, it actually helped out a little bit. All right, let me open up the searches directory. We have some more. We have some more searches in here. Bottoms up is a great one as well. If I click on bottoms up, same sort, VST divided by RT. If I run the search, a lot of the same stocks in here, but we have different ones. Let me just quick test those top 10. Not bad. Okay, I don't think anybody would be disappointed with 27%. 9 winners, 1 loser. It found Eagle, Tidewater, so Eagle's a shipping company. All right, it also found AAC, went up about 45%. It still found NVAX though, right, down about 11%. You can do the same thing. Remember that 27% number. Let's cherry pick. Let's be a little bit more selective. I'm going to go and just select the stocks with an RV greater than 1. That's 7, that's 8. Looks like only 9 stocks in the top 20 with an RV greater than 1. That's okay. So let me just quick test those. Look at that, 30%. Now we got 9 winners, or so we did a little bit better, right? Let me show you guys one more. Russell 2000/RT. Now this is a bottom fishing search looking simply at the Russell 2000. And another feature or another tool at your disposal is in the VectorVest views in the strategy section. So let me go back to November 8th. And let's take a look at the Derby list. Look at that. On November 8th, Russell 2000/RT went up almost 3%. It was the top Derby strategy on November 8th. This is a great place to start, folks, especially when we're coming off of market bottoms. Okay, so Russell 2000 would be a great strategy to select coming off of this bottom and beginning to enter back into the market on November 8th. Let me run that. Okay. If I just simply quick test the top 10 stocks, look at that top stock, NVAX again. Let me click on the top 10. Not bad, 24%. Now you got 7 winners and 3 losers. You still got NVAX up at the top, SNMX. Let's see what RV score this one has. Look at that, low RV score, right? 0.44. BIOS was down a little over 1%. RV score below 1 as well. So not bad still, just simply taking the top 10, you're up 24%. Let me cherry pick. I'm going to take all the stocks in the top 20 with an RV greater than 1. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And I'm going to quick test those selected. Wow, a lot better. 10 winners, no losers, 32%. So we improved each campaign by just being a little bit more selective and just cherry picking the stocks in the list with an RV greater than 1. So remember, it comes down to 2 things: precision timing and stocks with good upside potential. And coming off of a market bottom, you can practically pick any of these searches and do well. Okay, I just highlighted some of the better ones that performed well off of this major bottom back in November. So folks, I just scratched the surface here on the types of opportunities you'll have when participating in these types of market rallies. Let me tell you about what we have going on next week. We are live streaming our brand new Bottom Fishing for Explosive Profits Seminar next week on May 11th and May 12th. It's a 2-day course. We've given this course once before and it was so well received, we decided to live stream it from our University Center here in Cornelius, North Carolina. Now I know it would be very difficult for any of you to get here on such short notice, right? You'd have to book a hotel, get a plane ticket, and who wants to fly nowadays, right? Well, you don't have to. You can join us from your couch or your office or wherever. Now the early bird rate is still available. It's $395, and if you're an elite subscriber, you'll only pay $247.50. If you have any questions, you can give our support department a call at 888-658-7638 or visit our website at vectorvest.com/events. We really look forward to next week, and we hope you can join us. Have a great weekend, everybody.